We got some huge news for Meta stock investors as the company announced it will be borrowing $30 billion. Now, I'm going to talk about the details of the announcement and what it could mean for Meta stock investors. So, Meta Platforms is planning to sell $30 billion of investment grade bonds on Thursday, the biggest high grade bond corporate offering of the year. And the company received record orders for the debt. And what that means is demand for this debt is very strong. Lenders want to purchase, lenders want to lend money to Meta Platforms because they feel relatively comfortable about getting their money back and making a good return on their investment. So they're happy to lend the company money. And I'm not surprised. Meta Platforms is a cash generating machine. It operates on operating profit margins that is above 40%. Really lucrative business model, very low debt to equity ratio. So it's a relatively safe bet for lenders to give Meta Platforms money. So all that being said, why is Meta Platforms even borrowing $30 billion? Is that a bad sign? And I know most of you, that's the conclusion you might jump to. If a company is borrowing money, that's a bad sign because they need money. And typically, when you see somebody looking to borrow money, you might jump to that conclusion. But I'm gonna talk about some reasons why it's not such a bad sign. So first of all, let's look at why Meta needs this money or why they want this money. So for the full year in 2025, they expect their total expenses to come in at around $117 billion. And then capital expenditures for 2025, they now expect to be $71 billion, up from $69 billion. So their spending overall for 2025, they expect will be $3 billion more than what they previously thought just 3 months ago. And then they went on to say, as we begin planning for next year, it's become clear that we need more computing power, even more than we thought 3 months ago. So we expect to invest aggressively to meet these needs, both by building our own infrastructure and contracting with third-party cloud providers. Our current expectation is that CapEx dollar growth will be notably higher in 2026 than it was in 2025. In 2025, when it's all said and done, it's likely that it will have increased its CapEx spending by roughly $30 billion. So then in 2026, it's going to increase by more than $30 billion. Click the link below to watch the full video.